Hi everyone, friends, today we continue to talk about the Primex Finance project and the topic will be analysis of the future of margin trading. This is a part 2, so let's start the review. But let's remember what Primex Finance is. This is the DeFi protocol that will allow margin trading on DEX exchanges with leverage. Simply put, traders will be able to earn a good income as lenders will finance the margin. Interest will depend on two factors, margin fees and profit from a successful trade. Such a system makes it possible to earn much more than in lending protocols. Traditional margin trading and barriers. Traditional margin trading is when a broker provides capital to a trader who takes leverage in order to increase his profits. Because traders need large investment, because price fluctuations and insignificant, accordingly depending on the capital. If you want to trade with leverage, you must meet certain requirements of brokers. If you want to trade leverage derivatives, you sometimes need a special license. With DeFi, it becomes possible to trade with leverage without any restriction or licenses. Over provision. Whoever borrowed assets must block assets whose value exceeds the law. This is necessary in order to prevent strong price fluctuations, and the creditor will be able to compensate for possible liquidation in this way. In essence, this is anti-margin trading because the trader has less capital to work with. Primex provides capabilities that will provide protections for DeFi lenders. These are credit buckets that have strong economic incentives and automatic liquidation of excessively risky position. Trading assets. If you trade on the stock exchange, the assets that can be traded can be real or virtual. If you use a dollar in trade, you are borrowing them accordingly. Or you can use derivatives or an option contract that gives the owner the option without buying the asset. Derivatives trading is strictly regulated and prohibited in some countries. For example, the USA doesn't allow trading in derivatives, while Europe allows it. CFDs don't require the movement of actual assets, but simply a centralized broker who crosses out the opposite sides of the trade, so their order books. In DeFi, a common tool to enable leverage trading is a perpetual derivative. This is a futures contract that doesn't have a settlement date. That is, in fact, the trader will use a virtual asset, but at the same time he will be able to spend real assets without harming the principles of DeFi. Balancing and knowledge of risk. Primex protects lenders through decentralized automation of the margin call process. Custodians monitor the transaction and can liquidate the transaction if the risks are exceeded. Anyone can be a custodian as the terms of smart contracts are verified before liquidation. Lenders who are more leveraged and willing to take on more risk can earn higher returns for their liquidity services. Next, it is ease of use. The demand for spot margin trading is constantly growing. Margin trading provides liquidity, pretty efficient and a powerful economic incentive for traders who want to participate in the market. The Primex team plans to create tools that will calculate points and automate some functions. So the future of decentralized margin trading, the demand for spot margin trading is constantly growing. Margin trading provides liquidity, price efficiency and a powerful economic incentive for traders who want to participate in the market. So the Primex team plans to create tools that will calculate points and automate some functions. See you soon, bye.